Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager. Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for the 26th of the 7th, 2021. It's Monday. Time is 04:30, 4:30 in the morning, GMT. Asian session coming to a close, European session firing up, our lunchtime, North American session. Right, Friday the 23rd, the last full trading day. We had a negative unopposed driver in the yen at -123. No backdoor flows. The opposing positive flows mainly going into the euro at +62, into the dollar at +53, and the pound was the positive rock at +8. Activity ±123. Over last week, just to remind you then, we had a positive opposed driver in the dollar at +111. Front and backdoor flows mainly coming out the yen at -96. Out the euro -38, and the pound was the positive rock at +23. Activity ±134. So over last week then we had the dollar driving positively with the flows, the opposing negative flows mainly coming out the yen, out the euro, and the pound was receiving a bit of backdoor positivity +23. Intraday then, this is the Asian session to about 15 minutes ago. We've got a positive unopposed driver in the yen at +56. No backdoor flows. The opposing negative flows mainly coming out the pound at -44, out the euro at -7, and the dollar is the negative rock at -5. Activity ±56. Right, what's going to knock it about today? Or this week generally. We've got light data as usual on Monday, but we've got German Tier 2 business climate data and business expectations data. German data has improved recently if you look at our data cycle, so it's likely that will come in reasonably strong despite the lockdowns, etc., and the increase in COVID. Right, so Tuesday the 27th then, we've got US durable and capital goods orders, and the big one on Wednesday the 28th is the Fed FOMC rates decision and minutes. So we've done a bit of a rejig on our positions. Talk about that near the end, but basically we've chopped some out and added some different ones, and we're about 1,300 points of profit overall at the moment. So anyway, we'll let you know the details in a minute. Let's just look at the flows, and right. So what have we got? The euro. The euro is strong, except against the yen and the Swiss, which are stronger. The yen is strong across the board. The pound is weak, except against the CAD, the AUD and the NZD, the commodity currencies. The Swiss is strong, except against the yen, which is stronger. The CAD is weak, except against the AUD. The AUD is weak across the board. The NZD is weak except against the AUD and the CAD, and the dollar is strong except against the yen, the Swiss and the euro. Right, so what have we got there? We've got yen strength in the European Asian session, and we've got AUD weakness. Take your pick in the middle. Right, let's have a look at the asset classes. So we'll start with the dollar index as usual. So right, so let's have a look. US dollar index. Basically, it's had this break. It's broken. It's come back slightly, but it's basically at or near the highs. The dollar. Gold is unlikely to like that, and has come back, and it's 0.47 from the high. Oil had this break. It came back quite a bit. It's now recovered and it's just come off slightly. It's 0.33 from the high. Wall Street had this top, came off, it hit the top again, double top, it hit triple top, and it's now just come off slightly. It's there, so it's sub the highs, but not bad. S&P did this break. It came off, it broke again, and it's come off slightly. And the tech is very similar. It broke the highs and it's come off slightly. Right, so US 10 year. US 10 year is looking like this. This is the price, remember. So it broke, it's come off, and it's come back a bit. So it's 0.23 from the high. So yields, the price went up, yields came off, and now the price is on the up again. So yields are coming off. The bund, which is the European equivalent, has got this look about it. It's broken and it's come off just slightly the highs. So yet again, yields are weak in both US and Europe. Right, copper. Now copper's actually perking up these days. So it's broken. It's there. And it's come back and it's pretty much at the top. So and it's where is it? It's about plus 0.23 from the break. Right. So US steel. Still soft, but it's 0.28 from the floor. So it's coming back a bit. Right. So that's where we are in the asset classes. We know the flows in the Asian session. What we've got to do is sort out what we think is going to happen. As we said, we've had a good rejig. This is what we were. We were short USD, dollar against euro, pound, CAD, and AUD, and short NZD against euro. So we weren't euro, pound, CAD, AUD. Right, and we're now, let's have a look. Right, so the easiest way to write this is we're long the pound against the dollar, the New Zealand and the Swiss. We're short the dollar against the euro, and we're short NZD against euro, pound, AUD. Right, so basically we chopped out that CAD. So we chopped out the CAD there, and we chopped out the AUD there. So and we added pound Swiss. So we're long pound Swiss. So it depends on how you want to look at it, but that's basically what we've done. These are now, so we've got six different types of trades running, multiple positions in those trades. So we're basically long the pound against the dollar, New Zealand and the Swiss. We're short the dollar against the euro, and we're short the NZD against euro, pound and AUD. And if you look at, as I say, the Asian flows, we've got yen strength, and we've got AUD weakness at the moment. And what else we got? Last week we had dollar strength, but on Friday we had yen weakness to the exclusion of everything else. And today in the Asian session we've got yen strength to the exclusion of everything else. So we've had that big swing back. so we're running into the Fed, so it's likely equities are right up there. It's likely you're going to see equities test out the highs, some smallish movements, and then come back and sit probably just sub the highs again. So that's where we think we are. We'll carry on with this analysis tomorrow. Thank you for watching, and see you tomorrow.